The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians on this very first day of March 2017. Dow hit 21,000, it's trading right now at 21,055, up 242. The S&P is up 25 at 23, what is that, 89. The composite index right now is up 57 at 58.82. And this is going to be really interesting. The volatility index is down one at 11.91. Well, we'll talk about that in a moment. Let's just go on, and we want to get to the QQQ series. The QQQ's up leg F, alternate count, F/C. Broke to a new recovery high. This is leg C up in the 120-minute chart. E-mini right now is trading. Let me show you something very interesting. This is wave 5 in the Chapman wave 5 sequence. In the daily, leg D. In the weekly, leg D. In the 120-minute chart, I've got G/B. The technicals are so strong that I'm anticipating that there's going to be, I promised my subscribers I'd have a 12:30 update, maybe not to do anything, just to see how the market's holding, how our positions are doing, etc. Here's a very interesting thing. It looks to me like the 120-minute chart could go a tad higher, could pull back, so that would make it maybe tomorrow, pop up tomorrow morning, and then maybe we start a corrective phase. A couple of reasons why. But let's just get rid of this for the moment, and I want to explain something. Within the context of the markets, the rotational correction, remember I spoke about a potential high-level correction that could make the market, certain stocks could power down, but there would just be enough to go to trade sideways. It's called what I call a high-level consolidation. If you're in the wrong things, or if you're short in the right things, but if you're in the wrong things, they're going down, and you're wondering why the market's going up. If you're if the market's going up and you're in the right things, you're looking at this and you're saying, "Gee, why would I want to be short here?" Well, the issue right now is that in a Chapman wave methodology, a very quick, especially a peak A to B to C to D, this is the quickest you can get it. If you're looking at the E-mini, the low that was made on the 17th of February at 2336.50, this is an example, one of the perfect examples. It happens rarely, where every other day on a daily chart there is a high, a new leg up, peak, and a pullback. And the pullbacks last just one day. Look, you go from the low, the very next day there's a move up. It goes to 2365, pulls back very slightly, but it's a peak A. Rallies to a slightly higher leg B to 2367.5, pulls back for a day slightly. Then it goes to a leg C at 2370.75. I mean, 1 point higher each time, just not even. Pulls back, and then today you get this big spike. So my rule of thumb over the years has been within a Chapman wave methodology, a very quick A to B to C to D, even if it's just a B to C to D, becomes an opportunity for the market to have a sudden slide. I'm not saying a major turn down, I'm just saying a sudden slide, but only if leg D is not a breakout. If it's just slightly high, in other words, if it had gone to where it was earlier this morning, 2375, 2376, and then pull back, I said, uh-oh, be careful, now we're going to get a strong dip. The way it looks right now, we've just raised the base. That's exactly what happened in the weekly chart. When patterns repeat, they repeat in all time frames. So now let's go on with our story. Gold. And now we're going to get to gold. And as I do that, I want to go to John in Philly. Hi, John. How are you?
Hey, Basil. Thanks for taking the call.
My pleasure.
Great segue into the topic of my interest, gold.
So, what is the question?
Yes, we've had we're now in a nice 3-day dip in an ongoing rally trend, and I wanted to ask if there's something in your work that can identify clues as to whether or not this is likely to be a short-term dip, and if so, what price levels we ought to look at least according to your work.
Okay, so we're looking at the gold chart right now. This is the GC continuous contract. Let me just raise my chair a little bit. Okay, I'm back in the saddle. What we've got now is down. The gold is down 9.6 at 1244.2. What's really important about this, and you remember, maybe you didn't hear, but the other day while I was on, I was saying I'm hoping that we can stay in our gold stocks. They've done their gold positions. They've done extremely well. Well, I raised a stop and we got stopped out, and so we've taken very nice profits. I think one of them gave us a 26%. I can't remember offhand what the other one was, but now we're out, and I'm looking at this and I'm saying, do you really want to be out of gold? Because gold is this kind of safe haven as bonds used to be. I think gold is being treated now as a safe haven. So now what I'm going to do is just set that all aside and say I'm looking at a chart that says very clearly, let me show, this is the daily chart, it's a continuous contract. It's gone to a leg D with a doji high. Doji candle is like a plus sign, very thin. You have a very thin open and close where it's about the same. So you've got this little sideways little line, and then you've got a short line going up and down. That's the shadow. It can look like a plus. Sometimes I call it a long-legged doji. For my work, they're just a few candles that I use, and I use them over and over again, because if you become really familiar with your candle patterns, you don't have to do the whole book. Steve Nissen does this whole thing, and Steve Rhodes does a fabulous job. I just find that these are the ones that work for me. So I'm looking at this and I'm saying, wait, the 200-period moving average, let me show that this is a really good example of how you can use moving averages, but only when you need them. Otherwise, they're just sitting there like a gap or a other very important pivot point, or it's just not to be used until it comes into focus. And here we are. When you go to this, what I call the Chapman wave, rogue wave, spike and close to the downside back on the 9th of November, that was the election results. Gold turned down sharply, dollar ran up. What we saw was that 200-period exponential moving average the next day, this is the orange line, and the gray line, which is the 200-period simple moving average, became very strong repellent, such a repellent that it wasn't until, this is November the 9th and 10th, and what we're looking at is 3 days ago at 1264.9 on the 27th, gold tried to touch the 200-period moving average, couldn't. But now look at the internal work, and this is so fascinating. John, you got a moment so we can go through this, because I think it's going to give you the kind of information that I think you're looking for.
I'm all ears. Thank you much.
Okay, folks, we're looking at this 200-period moving average, and you'll see that it was a repellent line, then a propellant line. Now comes the big test. I'll be right back. Dow's up 246, S&P's up 26. Basil Chapman, Tiger Conditions Hour. Be right back, and we'll talk about 2100 as well.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, we're back. We're on with John Philly. The Dow is up 248 at 21,060. And my contention has been the slice to 20,000 was like a knife, hot knife through butter. It just went right through. In fact, it's gone right through from 20,000 to 21,000. Whoops, like that. Now I think we start to see the big choppy phase. And the reason why I bring it up, you see this 200-period moving average in the gold contract? We might see the chop, chop, chop. If that 200-period moving average, just think of it as 21,000 in the Dow. That's what I think we're going to get is a chop, chop, choppy phase between a little over 21,000 and a little under 20,000. And that could turn out to make it a magnet. So this takes me to the very next step and say, John, if you can see how we've made essentially like a sine wave, let me just draw this so you can see there's another arch right here. So what we're doing is we're rotating and rolling above and below the 200-period exponential moving average. My contention is that gold has made a very significant low, but at this particular point, the last rally was not really accompanied by the type of strength we had seen in the gold stocks before. Some did go to slightly higher highs, but mostly they were kind of squeezed to the upside, and now they've pulled back very sharply. And the gold stocks essentially led us up. If you look at the GDX, it was in a certain way, it's been the harbinger of the bigger move in gold. And right now, the GDX is down 29 cents at 22.56, having made a doji peak E-top at 25.71. We were in this from 1808, I think it was. 21.20. And we took a very nice gain. But I'm looking at it and I'm saying, you know what? I think as an inflationary hedge and as that fear factor that I've been talking about, I think it will be back as a play very soon. So this is what I'm looking at. The gold contract has come off its low. Today, the low so far has been 1237.2, and now it's $7 higher, down $9. But the way it's the way the MACD is just close to deflecting lower, or at least crossing lower, and the stochastic is pulling back, my thinking is that it's this line right here. Just remember, I don't want to talk out of turn. Yeah, it is. It's the 50 period, which I've been using quite a lot more lately. The 50 period moving average at about 1220. I think that's going to be the big test. And here's why. the dollar, and I know that you will not be looking at gold unless you are looking at the mirror images of what has a reflex action away from gold, and that's the dollar. When the dollar goes up, gold tends to go down, and vice versa. Doesn't tell you the degree, just tells you the trend we're looking at. So the dollar made that peak C1, peak C2, and then in the same time, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Today's the 5th day. We've gone to a slightly higher high. This double U formation, like a soft W, with the MACD still strong and the stochastic not that great, is telling me that the reason why I said I think that the gold could pull back a little bit is I want to see what happens when you get a peak C1, C2, which imitates the peak D, but very often we've seen that you still get that leg D. I need to see that the dollar by today's Wednesday, by Thursday, I would say by Friday morning at about 11 o'clock, by the time I do the show on Friday, if the dollar has failed to get into this candle right here, the candle of the 11th of January, 101.28, and it's at 101.68 with a high of 102.95. If it can't get to the upper part of the wick, which is at 102.45, to say, yes, it could touch the top of this candle, then I'm thinking that gold is just taking a well-earned rest. The gold stocks are taking a very well-deserved rest. And I don't think that there's a rush, actually, at this point to get back into the gold. But I am going, let me go back to the gold contract. I am going to watch it very closely because the magnet of this 200-period moving average, not yet a magnet for the 200-period simple moving average, which right now is at about 1271. That's where the level is of resistance. I think we need at least another couple of days of testing the downside. The most important thing is if gold takes out the low of 26.80, the low of the 21st of February, then I think we're looking at something deeper because the MACD will turn down and finally the stochastic will probably go under 80%. So I'm watching it now. I know that you've looked at gold. Let me ask you the question. At this point, do you have any position in gold?
As a matter of fact, thank you for going through that dissertation. That's real thorough. The answer to your question is yes, I just bought it. And Basil, I'll tell you why. I know there's always a reason I call and ask you questions because I'm always reminded when I listen to you go through your work of stuff that I had missed. And I'll just bring this up. As you were discussing the daily chart 200-period EMA,
right.
I just brought up the gold futures on the 120-minute chart.
I'm showing that right now. And you see that 200-period moving average?
And the 200-period. And I noticed today's low was precisely at that level.
As it was when it took off at 10 o'clock on the 21st of February. It hit it exactly. Yes.
And you have done such a good job for me and other people, I'm sure, of showing how and when to use that 200 EMA tool on both the weekly, daily, and actually 120 minutes. And my conclusion would be that low that we made this morning is a candidate for the bottom of the pullback merely because we went to that 200, we tested it, we reversed right away from it.
So in part of the educational process, John, let me just say this. You see on the 21st at the low of 1226.80, I've got a line. Let me just draw this line and I'll keep it there and I'll make it nice and thick. In this particular line that we've got right here, the vertical line, I'll make it thick, wait, and I'm also going to make it lighter, so transparency, let's go to 80%. So now let me see, you can see it very nicely. So that line, look at the V-shaped recovery in the stochastic. Look at the V-shaped recovery in the blue line, the on-balance volume. Look at the reversal to the upside 2-3 bars later in the MACD, which of course is the slow of the series of moving averages, so you expect it to be delayed. And then you see the retest, and that retest had all these indicators way high. Even the on-balance volume that pulled back quite sharply was still much higher than it was at the low of the 21st. Look what's happened here. On the 28th, you had a reversal of the stochastic. The MACD tried to turn up. The price tried to turn up and failed. What we're looking at now is the MACD is the histogram, these little vertical lines, very important because they are telling you about the 9-period differential. That's the composite that's made up of the moving averages. And what that histogram is saying, still way below the 0% line. The slow-moving average, the green line, is trying to turn up, but that's the 26 period. But what's really important, the on-balance volume has had a really nice move to the upside, but you haven't really had a commensurate move breakout in the price yet because there's still that 9-period moving average that's resistance. And look how flat the stochastic is. So if you want to wait, I can go through the implications of this. Why I'm thinking there'll still be a retest. It's up to you.
Basil, I'll listen to that after hanging up. So thanks so much.
Okay, very good.
Great thorough assessment for me. Appreciate it.
Thank you very much, John. We'll be back, folks.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. So let me just finish this up here. What I'm looking at is that the slow stochastic at 20.73 is good. But I'm suspecting that we're going to see a little bit of a pop-up in the gold as the dollar maybe just digests this leg D. But if the dollar moves even 30 cents higher between now and tomorrow morning, I think gold comes back and retests. And yes, it's the 200-period moving average, which is really moving higher quite sharply. And now you've got a test of it at a higher level. But I'm suspecting that there's going to be a pullback, and if there is a close below the low of 1237.20, let's call it 1237, on any one of these bars by tomorrow, I think it could be pulling back quite sharply. And if the dollar breaks out. I'm just thinking that the GDX is telling us more about gold than gold is telling us about gold. That's just my impression anyway. So here we go. A whole bunch of questions, and we've got Brent in California. Brent, how are you?
I'm doing great, Basil. How are you today?
I'm very well, thank you. Uh-oh. Are you messing around with oil again?
I had my eye on ExxonMobil as it came down to that low, a few days ago.
Right.
And it kind of held that level enough. I bought in at 80.90.
Oh, very good.
I have shares, and I also bought. I have contracts of the April 80s calls.
Oh, okay. So let me can I just tell folks, we're looking at ExxonMobil. On the left here, you've got the daily. In the middle, you've got the weekly. On the right, you've got the monthly. And right here, you've got the 120-minute chart, which is in leg C right now. So let me just move that away for the moment, because I wanted to show that within the context of markets, I just want to show this in the big picture. You've got a failure pattern in this cup, the right shoulder of the cup, in Exxon, made a peak E way back in July of 2014 at 104.72, plunges down to 66.55. You remember I was on air, I was discussing my first real experiment at my Chapman Wave 5s. I said, I think this is going to be a Chapman Wave 5. I believe I had a webinar and I mentioned it. And if so, you should see Exxon. It doesn't tell you how high it's going to go. It says it should move up from here, and it did that. Now, what's really interesting is it went to another peak E in the daily, and in the weekly, and that was in July of 2016, and that was at 95.55. And then it came down to the low that was made just a few days ago in a cup. Well, first of all, it made a cup formation, and then the right shoulder. Look how weak the technicals were on the right shoulder. Then it pulled back sharply. And what I've noticed with Exxon, I'm hoping to do more work on a number of different things. One of them is, does a stock or index send out a flash message that says, hey, look at the measurement of one of my major legs to the downside or the upside. If you see it repeated a second time, watch out, because that says it could even be a third time. Well, look at the move that right here from this Chapman wave overlapping wave high B, B minus actually, back in the week of the 11th, the 6th of November of 2015 at 87.43, and then it drops down to 71.55. Now, what's really interesting about that, it's almost the same move that occurred from that peak E right there in the 15th, week of the 15th of July 2016, down to that low. And look what's happened right now. So it's like if you can draw a parallel line and you can use it as a measuring stick on a particular stock, that's kind of what's happening. I had looked at it the other day. I thought, I'm not going to even think about it until I can see it. So I completely forgot about it over the last 2 days. And I really thank you for bringing it to my attention. So in a sense, the move to the upside right now could very much be like the move that started off the low that was made the week of the 30th of September, 2016 at 82.29. And it gapped up. I mean, it just spiked and rallied up for 3 weeks, 3 to 4 weeks, and it went to 88.67. So that's a 6-point move. So we're looking at this and saying, hey, could it do that again? That's really that was what I wanted to bring up, because I had completely forgotten about it. And as soon as I saw Exxon, I thought, oh, I must look at that again. So now, what are you looking for?
Well, it's something I like to hold on for a little bit. It's funny going back to your other chart where it hit that low of 66.
Right.
I was frustrated I had an alert set at 65. I missed that move back, when that happened. But this is really not as much as some of my other trades, something I really want to hang on to for a long period of time. It's more of a trade, I would say.
Okay.
And kind of a shorter term one, really.
So, wait. So it is a longer-term trade, not a shorter-term, or it's a shorter-term trade?
That's a shorter term trade.
Okay. If that's the case, then what I'm going to say to you is make it real simple. You've got everything in place perfectly. The low on Exxon today, 81.70. The low that was made 4 days ago, 80.76. I mean, so close. This is amazing that you're able to time it so perfectly. The MACD is running strongly. The histogram has gone positive. The stochastic is up at 29%. That's a good sign. On balance, volume has been a little bit worried here, but this is absolutely a brand new leg, A to the upside, gray A. What I'm going to say to you is this. It's really important that Exxon, as part of the Dow, and Chevron, these integrated oils, allow the Dow some leeway, because what I said to subscribers this morning, actually over the last couple of days, and I was talking about it last week, is that it is really strange that we've had such a broad move to the upside. I didn't want to talk about this, but I have to bring it up right now. The subscribers are long, DOD. This is Elements Dogs of the Dow. And this is the one that I said when we bought it, I said, we're going to buy it because I love the longer term. We've had it before, done nicely. Let's do it again. I don't think it's going to do as well as the Dow because it's the dogs of the Dow. It's not leading. It's the real leftovers that haven't done anything. And every year, I should have told you what they are, but offhand, let's just go straight to the chart. So this takes the worst stocks of the year. Usually this is what they do, and they include them as the next group for the next year that should do way better than the previous year. It turns out on a percentage basis that this is up about 30% or something. This is doing even better than the diamonds in some ways, and it's the dogs. There's something so broad about this rally that it's going into whenever we get a high-level consolidation. Look at the IBB down in the 260s the other day, or 70s, and now it's at 301. So the rotation through the different sectors is what's really keeping this market buoyant. Just wanted to add, in terms of Exxon, my thinking here is that the fund managers who are looking to rotate because they've missed a big part of the rally are constantly going to grab the low-hanging fruit because they think percentage-wise in Exxon in the 81s to the 83s, just going to 86, the 200-period move, the 200-period simple moving average. Most people look at the simple, which is up in the 87s. I think they're trying to play for a trade. So I'm going to say congratulations. Hang on to this. Let's look at it again in 2 days' time. I think it's actually going to have a nice move from here. Hope that helps you.
All right, thank you very much, Basil. Take care.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I just wanted to add one thing, Brent. The 120-minute chart is in leg C, and it just extended that leg C just a moment ago. It went to another slightly higher high. And what's really important, it's getting real close to the 83.42 level. And congratulations, that was a great entry. Now, I've got a bunch of questions that I've got to go to. Let's see. From the Den, the first one was, whoops. Basil, should we be buying or adding to MWA? Oh, man, the MWA. I forgot to be reminded. Muller Water Products. I would be adding at this point. You already have the questioner already has a position. So I'm going to say to you, I would prefer at 12.79 up 40 cents, 12.79. I'm going to defer because it's up today in the 3.23%, very nice. But yesterday had a deeper move down, and the MACD is really strong. The turnaround is very strong. The stochastic was very strong, but it hasn't really broken out. It needs to break above 12.94. Here's what I'm thinking. Because it's an add-on position, I'm willing to take the risk and say to you, I would do it 1 penny above the high that was made, 12.95. On the 20 seconds. So 12.96. So that's only 13, 14 cents away. You could actually start it now if you wanted, but I really would like the confirmation. I need to, because the weekly chart, the technicals are still quite weak, but it becomes really strong if it can get to 13s within the next 3 days. So I like it on the monthly basis. I kind of like it on the weekly basis. I had it as a watch stock, and then I forgot about it. Thanks for reminding me. I'm just going to say to you, if it's right now, if it's me and I have a position, I'm going to say I'd rather keep my position and not add with a chance of waiting for a decline. I'd rather add on strength. If tomorrow the general market is not down quite sharply, and whatever the market is doing, if Muller Water Products, MWA, is trading at higher than 1273. No, 1275, 10 cents lower than this. If it's trading higher than this and it's made a new recovery high, absolutely, then I do it. Now, if you say, hey, for 14 cents, I'm not prepared to even mess around. If you think that it can go higher, I want to nibble on it. I'm saying to you, the reason why I wanted to do that little extra move to the upside is because I wanted to make the bend. I want to get the start of the second arch. So the second cup formation, and that will give me a hint that it's working both in the 120-minute chart right there and the daily. That's all. So if you think you're prepared to put that up, I'd say, okay, add a little bit now. But I would make it 2 positions, a small position right here if you want, and then on strength. I want strength. I want to see it trading. And actually, I'd actually like to see it trading for an hour and a half or more above 12.95, and then I've got a much bigger comfort factor. Hope that helps you. And support obviously must be down in the 1240s. Let's go to the next question. I can't see. Oh, GDX was a question. I think I did the GDX. Yeah, GDX, I'm just waiting. I think it's getting closer to something that says, hey, I'm near an area, leg D down. I'm near an area that I'd like to bounce stronger, but I'm not going to mess around. If this dollar, look at this dollar, it's pulling back, but it has broken to a new recovery high for that leg D. And the MACD is strong, stochastic's turning up. Just have a little patience, is what I'm saying. Okay, here we go. Next question is the SPY. Do I think that the SPY 240 or 245 will be the reversal area? So this then, there's no other way to count it. A, B, C. This has to be leg D. This is brand new leg D because that was F slash B. Yeah, G slash C right there, G slash C. And now it's in D. And my on-balance volume is starting to get to an area that says, hey, now you can start to be considering that this is Chapman Wave 5 here as well, but you can start to consider that some kind of a consolidation, especially since I'm really looking at 21,000 as being a fulcrum for moves up and down over the next week or two. I don't think we're getting a serious decline until two things happen, and that is that the VIX index, I haven't even spoken about the VIX index today. The VIX index, which is trading at 1209, is actually pretty good, down only 83 cents. It seems to me there's buying. I don't know how you really do it. It's just my gut instinct, having done this for so long. Something's telling me that I believe that this is professionals buying, not just insurance, but they might be buying positions. The reason I say that is because it's actually starting to hold well towards the close over the last few days. And that just says, yeah, the VIX index is going to become very important. As I said to my subscribers this morning, we spend a lot of time. I talk about the VIX all the time. Every single day we've got I give the parameters for the volatility index. Where is it? There it is. This is my market. What is it called? Overview and market today, right here. These 5 quadrants. This is the 120-minute Dow. This is yesterday, of course. It's now in a leg E. This is the VIX index having pulled back very sharply from an alternate count E. This is the short-term trading index. Richard Arms, I use it just for 2 reasons. Particular numbers on the upside and numbers on the downside. And this is the bar chart of the Dow daily and the bar chart of the S&P daily, and they both extended. So I had G/C, and now it's gone to a D. But what I wanted to show you is, you see this right here? You can see it. Yeah, you can see that nice big, it says VIX, volatility index. I said, we've just got to keep our eye on the buying and selling pressure via the VIX index. And as long as it starts to it keeps trading down in the 12s and 11s and 10s, that's buying pressure. When it starts to go and hold in the 13s, you will see this market finally take a breather. And that's keep it simple. I'm trying to keep it simple. So we got stopped out of our small short position in the Dow. If I want to add it back, I'll add it back. But it was small short. Thank goodness we do have positions that are doing really nicely, that are more than making up for it. I don't like to think of it that way, because if you're the one that has the short position, but I did mention we're taking a small short position. We'll only add when certain parameters are met, and they haven't been met. So the VIX index is actually in, if I do it in the more modern way that I notate the charts, there's a slight difference to the way, and I'll be talking about this over a period of time, because I know some people have bought my CD just recently. So let me just make it clear. I'm starting to include, I've done this for a long time, but I'm starting to make it more formal, that the low bar is the low bar, and that you can get a single leg A up that pulls back. But what I've started doing is counting all the peaks, higher peaks, even if the price goes down, but as long as it doesn't take out the low. So that's an A on the VIX index on the 8th at 11.82. This is the B. Normally I would say it would start right here, comes to the same thing, because that A right there just does the same job. But I'm trying to be as thorough and articulate as possible. So everything from that low on, you can count each higher peak, and this is leg C right now in the volatility index. Keep it simple. In the 13s, you will start to see selling pressure come into the market, but only if it closes in the 13s. Yes. And Coda, I was at a meeting. We'll talk about that another time. let's go straight to the question. So the SPY, what am I looking for? I would not be surprised, based on my MACD and based on the Dow, if we are getting really close to at least a digestive phase that says sideways and the upside is done for this period, the downside is going to be ameliorated by buying pressure until the 13s is sustained in the VIX index. So is it 240 or 245? I think we are really near to some kind of a consolidation, around about 240, 41.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So let's just do this in the remaining few minutes. IWM, gradient breakout. This is an F/B in the daily chart. Weekly chart is still in leg C. I mean, is that a harbinger? Is that telling us about things? Whoa, let me just see something here. I almost did that, and I never did it. I said so. Oh, let me just look at our Dow Quartet. GE is up nicely, up 36 at 30.17. I wrote to my subscribers this morning, I said, GE, buy here as a short-term trade with question marks, and I especially put 3 question marks because I said, okay, when I review, I want to do a position in GE because if the market does go higher, I think GE will go higher. Well, I completely forgot about it. We have other positions, can't complain. So that's so weird. Look at GE. GE is nice. IBM, this is a good action. It's not great yet. It's just good action. IBM, yep, nice move up, $1.64. Triple M. Triple M is at an all-time high leg, C in the weekly, D in the daily, C in the monthly. Oh, I tell you, this is amazing. The UTX example is nice gap up to 113.85. That is not an all-time high. That was at 124.45. It's trading now at 113.86. So leg E in the daily, E in the weekly, and C in the monthly. All right. So let me so the SPY, I told you about 242. I think 240, 242. I would not be surprised. Next question I had is Bob wants to know J.P. Morgan. J.P. Morgan. Now this is going to be so interesting. You see J.P. Morgan right now, big gap up to the upside. Is that a brand new A? Is this F/A? That's amazing. Leg D in the weekly chart and still a leg B. This is fantastic action in JP Morgan. XLF. That's why I don't want to step in front of a freight train. I did tell my subscribers I'd update at 12:30. I have to think this through very carefully because I think, look, if you're up 266, we would have to have a major news story to gap down tomorrow 300 points. If one wants to short this market, I think there's time, and you can look at a move down and say, I'd rather be shorting a move that started on the downside than to try to time exactly to the turnaround on the upside. So we're going to be watching that real closely. Next thing is, the bank sector is just doing fantastically. SWIFT, SWFT, how much time? Yep, I got time. SWIFT, no, I think that there are some in the transportation area, probably the CSX. I did some work with that the other day. CSX, A, B, C, D, leg D, like a cup formation. You know, when I look at the transportation index, IYT, this is really good because it has airlines, etc. But I do believe, based on the work that I do, is that we are getting to an area where finally I can say this extension to the side, INDU, this extension right here in the stochastic is just about to run out of time where it could start a pullback. That's really what I wanted to say. So I'm looking at, how can I put this? More questions. Whoa. Let me just get there real quickly. This is the one I wanted to look at. What was it? Oh, yes. I didn't do this today. The TLT. Gap down, huge. And that says that the interest rates, let's go to the TNX.X. This is really important because you remember that line that I was talking about? I haven't got time to go to it now. Maybe I can. Oh, just make it real simple. If the TNX, the 10-year T-note rate starts to trade above what was peak A in the monthly at 26.21, if it goes to 26.30s, there's a new ball game in town, and I think that will be the first time that the market becomes vulnerable. I got that in. That's how I wanted to start the show, and I forgot. That's how I really wanted to look at it. I'm satisfied with that. Folks, I'll be back tomorrow. Check out my opening call. I think you'll find it hopefully very beneficial and lucrative, and let me know.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.